Hey, happy Friday. Well, it's been an interesting week for sure. Of course, we had the big lead up and all the excitement about the Fed meeting this Wednesday, and then it came and we got a half a point cut, which was a little more than many had expected. And really, at the end of the day, the mortgage rates looked at that and said, big deal, and then we move on. And why that happened for the most part is that if we look back to August, the Fed said they were going to cut the rate, so that was expected. It just wasn't certain how much. But leading up into the recent few days going into the Fed meeting, the sentiment shifted that it's going to be a half a point cut. And so that started to get cooked in and baked into the rates that we were seeing, them getting better and better. And so when the Fed did what was expected of it by most, not all, then the mortgage market kind of just shrugged it off. And so we actually have seen rates a little bit higher right now than we were on Monday. All still very, very good, however, and still the expectation is that we're going to see them trend downward. Now, I shared a video a couple days ago. You can go check that out. It goes into more detail about the Fed funds rate and what that cut means and everything else. The bottom line is it doesn't mean our mortgage rates got cut by half a point. That's not how it works, but it does, I think, help us in the long run. I think it's a good sign. Going forward, it's going to be about the data again, much like it has been leading up to this point. So we're going to see, what does the inflation look like? What do the jobs look like? And the next thing on deck, as far as that's concerned, is next week we have a few reports coming out. The heaviest one being on Thursday. That's the CPE report that the Fed loves to gauge inflation by. And so we'll see how that comes out, and that can help move rates a little bit, of course. Overall expectation, we'll still expect to see rates coming downward. I think that if we're closing in the next week or maybe week and a half, we'd probably want to be locked in at this point just because we don't know exactly how it's going to move, and we are a little bit off from our best levels at the moment. If we're going out there and we're looking at 3 weeks, a month, or longer, I think we can afford to continue to monitor things and not lock in right now. If there's anything you need, just reach out and let us know. Otherwise, have a great weekend, and we'll keep you posted.